We meet in an hour of change and challenge, in a decade of hope and fear, in an age of both knowledge and ignorance. If this capsule history of our progress teaches us anything, it is that man in his quest for knowledge and progress is determined and cannot be deterred. Because that goal will serve to organize and measure the best of our energies and skills. Because that challenge is one that we're willing to accept, one we are unwilling to postpone, and one we intend to win.
So we are here today with Colin le Duc, who is a founding partner at Generation Investment Management. Colin, welcome to Energy Impact.
Thanks for having me, Brett. Really appreciate the invitation.
Yeah, no, I mean, I've been following your work for some time, like super impressed with everything that you guys have done to pioneer the space. And you really are like pioneers in sustainable investing. So kudos to you. I mean, I'd love to take this time though, to maybe just learn a little bit more about you personally and understand what your journey was, to get to this point.
Yeah, no, thank you. I think, plenty of people have been on the sustainable investing journey for a really long time. And I think, Generation is one of those players, but I want to recognize a much wider movement than just Generation in terms of helping mainstream the idea of sustainable investing. My background, I sort of grew up in lots of different countries, and I think that really helped shape my view on the world and got me very interested in sustainability very early in my life.
What prompted that? Did your parents, were they diplomats or something? Why did you move around a lot?
Well, my dad was a civil engineer, apparently. He might have been doing something else, I don't know. But yeah, no, that's a sort of bit of a joke, obviously. But we just moved around for his work. And as a consequence, and also probably more seriously, we left South Africa. I'm half South African. Because of apartheid. And, that was a very kind of formative stage in my life where I realized, and my family was involved in politics in South Africa, obviously in the anti-apartheid side of the story. And so it became just untenable to live there. And so that was the first sort of real awareness I had around, social justice issues in particular. And then ended up just, being a bit of a nomad, have lived in 9 countries. Wow. Across the world in my life, and currently reside in California, but have lived everywhere, all over the world, which was really, I thought was entirely normal growing up and, moving every 2 or 3 years to a completely different country on a different continent, but obviously not. And, I also was very exposed to a lot of poverty and a lot of environmental issues as I was sort of on that journey around the world growing up. And then also it finally ended up at a British boarding school, actually, that was run by a bunch of Benedictine monks. And the moral and ethical education that came through that was very formative as well. And it became very clear to me that, I was obviously very privileged in life and with my family situation, and et cetera. And, it was very much an opportunity to just think a little bit bigger about what I wanted to do, and went to an undergraduate university in the UK, which was quite progressive and really turned me on to the idea of climate in particular and what the evolving climate crisis.
And what year was that? What year did they start teaching about climate?
So there was this, I was there from 89 to 93. So,
wow, I can't believe it. I mean, that's really early that was part of the university conversation.
Yeah, I mean, they were very, it's the University of Bath down in the West Country in the UK. And they had a course there called Emerging Patterns of Thought and Belief, which was effectively New Ageism packaged as academically credible. And it talked a lot about Gaia theory. It talked a lot about climate. It talked a lot about the planet being a living organism and all of these things. And it really turned me on to the idea of sustainability. And then I was studying business. And so I was obviously interested in business and investing. And it became very clear that maybe those two things could come together. And so in the mid-90s, I started working on sustainability and business topics, and very, very few people were thinking about this. And, so I became, I got involved in various different projects, worked for different people,
Well, tell me, when you were, let's say that you started your early career as the sustainability finance or, investor or business guy, what was it like talking to your colleagues back then before there was a generalized awareness of sustainability issues? Was it a fight every time? Was it like, hey, this is going to negatively impact our, financial outlook, so we just don't want to do it? Did you have to like scrounge for it? Or were people like, no, sustainability is important, but we don't know how we're going to make it work? What was the general sentiment?
Yeah, so I mean, I started with Total, the French energy company, with the belief that the big energy majors were the ones that were going to lead the transition to net zero. And it was a little bit too early. And then I quickly sort of moved via consulting into investing, because I realized that friends of mine were very involved in the investment world. And it became clear that if one owns shares in companies, you can influence outcomes.
Yep.
But at the time, the overarching narrative around sustainable investing was very much focused on socially responsible, ethical, negative screening type investing, and it was very much seen as a way to basically lose money. And that was a difficult slog, but it was I could going into the internet boom period, there was a nascent sense that there was a long-term inevitable surprise to the sustainability challenges of the world.
And who was this being driven by? This sense, was this still from academia? Was this from government? Was this from just the like well-educated in the business elite, like just kind of had this like ethical underpinning? Like, who was really like bubbling the sentiment up?
I think a lot of credit goes to the NGOs, frankly. At that time, I think civil society, when it works really well, is very good at awareness raising around topics that then more mainstream actors can take on over time. And I certainly learned a lot from a lot of the early NGO commentary around the climate crisis and the potential positive role of business, not just the negative impacts of business, but the potential positive role. So it was very much in this kind of academic realm, a lot of sort of quite underground conferences, which had a lot of very out there entrepreneurs or academics talking about very random things related to sustainability. And it just really struck me as an enormous idea, and that very few people were paying attention to. And I just couldn't, it's not magic. It's just, hey, the world's got a lot of major sustainability challenges, and the notion of perpetual growth, is just untenable with the resource constraints of the world. And it just struck me that investing had a role to play in that. And so I really started off in the investing community working on the Dow Jones Sustainability Index, which was the first kind of large cap stock index that focused on trying to assess corporate sustainability. And then, that was my first kind of investing experience, if you like. And then also was quite involved in setting up other strategies in venture capital, private equity, and other thematic funds in public equity before we got together to create Generation.
And before we get to Generation, how did people hear about you? Like, was it through these conferences or other events? I mean, how did people know to reach out to you when they needed consulting, when they needed strategy work on their investing portfolio?
I mean, I was working for sustainable asset management in Zurich, and that was really the first credible institutional asset manager in the world that was focused on shareholder value driven by sustainability. And I went to work there because, in my view, they were the best at the time. So people migrated to that. A lot of people went to work for them in sort of the early 2000s period, when they really were propagating a model that was genuinely one step forward from the negative screening model. And so it attracted a lot of really interesting people, and Sam was seen as the leader at the time. And so that attracted a lot of attention, including, how I really got to know Al Gore and David Blood was really primarily through that. I mean, there were other connections, but it was because of what I was doing at Sam that I was lucky enough to be introduced through to David and Al.
And Sam is Sustainable Asset Management, correct?
Yes, it's now owned by the Dutch organization Robeco, but yes, they are Sustainable Asset Management. They're a fantastic shop in Switzerland.
Okay, so people are coming to this organization because the organization has developed a reputation as really understanding these ESG themes, and then they find their way to you because you're the resident expert. And then what types of conversations are you having in the 2000s? And when you met with Gore, what was that conversation like?
Yeah, I mean, I wouldn't want to classify myself as a resident expert. I was just one of multiple people involved in thinking about sustainable investing, and I just happened to have some personal connections through into David Blood in particular, through a mutual friend of mine and David's, who is also one of the founders of Generation, a guy called Mark Ferguson, who was working with David at Goldman's at the time, and we all got together and started talking to Al as well. And it was a very serendipitous kind of process of various different interconnections all coming together simultaneously. And Al had obviously had his political experiences and was looking to get involved in the investment industry because he could see the opportunity to drive change and bring sustainability to capital markets, and was looking to really do ultimately what Generation does, which is to focus on sustainable investing as best practice and to try and demonstrate that sustainability is a very good way to manage money. And it just so happened that there were two or three different groups of people that were thinking about a very similar thing. So Al Gore and one of his kind of collaborators, and then the Goldman Sachs kind of cohort with David Blood coming out of Goldman's, Mark Ferguson, Peter Harris, and then myself. We sort of came together as the seven sort of founding partners, if you like. There was a couple of others, but, Peter Harris, Miguel Nogales, they also came along, and that we were all looking to do a very similar thing, which was to set up a dedicated sustainable investing business that would apply world-class understanding and thinking around investing in a fully integrated way with sustainability thinking.
And how broad was that definition of sustainability when it first got started? Was it sustainability even outside of the environmental space, like in terms of just like sustainable like business practices, or was it confined to environment, or was climate even really the main underpinning even back then?
We've always taken a very broad definition of sustainability. I mean, the name Generation itself, really was inspired by the Brundtland definition of sustainable development. So in terms of thinking about intergenerational equity on multiple levels. So, Generation has always taken a systems view to sustainability. And as a consequence, you need to think about the social as well as the environmental dimensions to the world and how the world is evolving to have a holistic perspective on where best to invest. And so, David Blood has always been very inspired by his time in Brazil as a child growing up, and he has had a very strong poverty angle to some of his motivations as well, to complement Al Gore's, primarily climate angle. But Al is a phenomenally intelligent individual who really understands many aspects of the world, way beyond climate. But climate is obviously such a big topic that is at the center of the Gordian knot of many of the problems that the world faces, and as a consequence, it is central. But Generation has always taken a view that what a company does, how a company operates, needs to be focused on the long-term needs of society. And if you are managing your company well for the long term, and you're providing products and services that society really needs, you're probably going to be around for a while. And so it's really about, and that helps when you think about compounding effects within investing and in business, that if you're on the right side of history with, what you provide and how you do it, you've probably got a good chance of surviving in the long term. And survival is often half of the key in terms of just building a franchise over time in terms of making good investments.
Yeah, I mean, it makes, especially the way you spell it out, it's pretty clear. But so often across the world, fiduciary duty, maybe it's used as an excuse, or maybe people actually believe it, but it seems to be geared more towards short-term profits. To me, fiduciary duty should mean long-term thinking. So, like, how did you see the way other people behaved with their investments and other ways their company run versus this new line of thinking that you wanted to promote?
Well, I think it's pretty clear that, and I think the legal case is clear on this now, that integrating ESG is part of your fiduciary responsibility. And I think that is really interesting, because that was not the case when we started Generation in 2004.
Right.
People did very much feel that you had to maximize financial returns. Now, we would argue, and I think the case is pretty much proven with our track record and others' track records, that ESG integration helps you optimize risk and return and helps you in a long-term framework generate, very good financial returns. And so I think that case is made, but it's been a journey. There are still people who don't get that, but I think we may be reaching a tipping point in terms of the mainstreaming of sustainability thinking across capital markets. Now, there are lots of challenges which maybe we can talk about in terms of what that now means, but I think the general awareness that sustainability, impact, ESG considerations help you get a better lens on the quality of the business and the quality of the management team and the valuation of the security is common sense. And there's plenty of examples of, and people often ask me, like, can you point to where value is created by sustainability? And I can do that, but I also ask the question, so help me understand how unsustainable businesses are good long-term bets.
Right.
So,
Right. The inverse logic. What is that? The contrapositive is the excellent argument in this case.
Yeah, and I mean, if you just look at, I don't want to bash on traditional energy too much, but if you just look at the facts in terms of what percentage of the global index, traditional fossil companies were literally 10 years ago versus where they are today, that tells a story.
Yeah.
And it's gone from 12-13% of the benchmark down to 2 or 3%.
Yeah.
And that is sustainability in action right there. And so I think this notion of fiduciary responsibility is a very, very important one, because asset owners obviously have a lot of concern around making sure they're aligned with that. But as I say, I think the legal case is made for ESG integration. I think the next phase that is interesting is to what extent fiduciary responsibility actually includes the notion of generating positive impact. So not just minimizing damage, but actually genuinely contributing to the health of society through your investments. And that I think is the sort of next wave, if you like, of discussion around fiduciary duty.
And is this sometimes referred to as like double bottom line or triple bottom line when that's built into like the governance of an organization itself?
Yes, I think at a very high macro level, I think there's an increasing understanding that having a single financial target to measure progress by is a very blunt instrument. And so GDP being the most extreme example of that. So I think we all know that, and even the people who came up with GDP as an original construct, I know. They said, so please don't use it as a way to measure the progress of a country. So funny. And that limitation to a single financial metric to measure progress, that trickles all the way down to the micro level. So just looking at IRR, right, or ROI doesn't capture everything either. So, you actually need to think more broadly and holistically in terms of how you're assessing progress and value creation. So we do believe you need a wider set of metrics. And equally, the long term is not just a series of short-term steps that are, you can't just optimize for the short term every 3 months and then hope that the long term just magically builds up. You actually need to put R&D into long-term thinking. You need to think about innovation. You need to manage your people for the long term. You need to govern your entity for the long term. You need to set incentives for the long term. You need to invest in your communities. Like, these are long-term license to operate foundational aspects that enable financial performance over the long term. And if you were just purely, for example, driving your people as hard as you possibly could and burning them out every 3 months, that's not long-term. Your human capital is going to deplete long-term. That's not a good strategy. Or if you're just rent seeking and gouging as much money as you can out of your clients and increasing prices all the time, that might help you for 1 quarter, but it's not going to help you longer term, because you're going to really annoy your clients and lose all your customers. So these are very pragmatic things. And equally, how you are investing your dollars in terms of R&D versus, in terms of maximizing what is in your product suite today versus what needs to be there in 10 years time because of the pressures of sustainability, is also a very good indicator of how long-term thinking really is pervading in an organization.
I think that, yeah, that term parading, I mean, isn't it the case though that people's behaviors are really kind of driven by incentives? And so do you feel like there needs to be an official change to law or case law, or we just have to drive it into the culture through leadership? Like, how do we create the right set of incentives to govern people's behavior?
Well, yeah, I think it's a great question, and people do what you pay them to do, for sure. And I think that incentive question applies, right through the system. It's not just within companies. It's also, what is the stock market rewarding, right? And what should the stock market reward? And how should, as we've said, a country kind of think about what they're incentivizing as well. So, we do believe that increasingly is becoming the law of the land in terms of thinking about longer term societal issues as integrated into incentives. So a lot of companies, for example, they trigger bonuses based on what one achieves in terms of CO2 reductions, for example, or there are incentives in terms of making sure that there's a certain percentage of the various different types of diversity represented in the company, and you won't get a bonus unless that is in place within a certain amount of time. So,
and when you guys invest in a company, is that part of what you do as your onboarding? Is you say, hey, we're gonna go in and we're gonna change the actual compensation structures to match our values?
So Generation invests in public and private equity. And so, our levels of engagement and influence differ depending on the investing strategies. But we do engage and advocate for long-term incentives in both public and private equity. And sometimes in the private companies where we can have more direct influence, we do insist on certain and help companies basically develop all of their sustainability strategies, including compensation. And governance, which is obviously a very, very important part of what we think about. So, yeah, it sort of depends on the situation, but that absolutely. I mean, companies like to work with Generation because of our sustainability focus, because of what we can bring in terms of helping them make their own sustainability case much stronger, and all of the different tools and techniques that we can bring to bear to help them do that. So, navigating through the increasing alphabet soup of everything related to climate and sustainability and reporting and all these different things, and navigating the increasing regulatory complexity associated to all this, as well as just sharing best practice amongst our portfolio companies, is an enormous value add and differentiator for Generation, because we're a pure play sustainable investment boutique, and that's sort of what we do.
Yeah. And so when you say public and private investments, can you just give us some examples just so the audience has a sense of like what types of projects and companies are you involved in?
Yeah, so Generation invests in both public and private equity, where we manage about 35 billion today. So we're a relatively small fund in the grand scheme of things. We're not BlackRock.
Doesn't sound that small to me, but
no, I mean, it's an enormous amount of money, but obviously, and we have, the point I'm trying to make is that we are quite concentrated in how we invest. So, we're not BlackRock or something that is invested in the whole market necessarily because of the size of their funds. So we can be relatively selective in what we invest in. So we can be quite narrow and concentrated in what we do. So, I'm not in a position to talk about public companies per se, but you can imagine that the businesses that we're invested in are the ones that are on the right side of history, are very long-term focused.
I guess I'm wondering if you could just describe the category of like type of company. Are these technology companies? Are they utilities? What are they?
Yeah, no, I mean, we see sustainability as being relevant to every sector in the world. So, it is an imperative for everyone. So in the public book, we do a lot of tech investing, we do a lot of healthcare investing, and we do a lot of industrials investing in businesses that we believe are at the forefront of accelerating the transition to sustainability in those sectors. Within the private side, we are a little bit more explicit in terms of the sectoral focus. So that would be on the three pillars of planetary health, human health, and financial inclusion. That portfolio will include growth stage companies that have technologies, products, services that are either accelerating, the shift to renewables, or the shift to electric mobility, or the electrification of buildings, or, basically, you name it, right across the board. Obviously, food, ag, healthcare is all part of that as well. And so we do a lot of investing around that type of theme as well.
you mentioned earlier some of the challenges that we're seeing now. How have those challenges changed when you first got started to how the world looks today? And I mean, I think from my perspective, we've made so much progress, but it only makes it painfully clear how far we have to go in terms of overhauling. I mean, just so much infrastructure, like to get to our goals, like just so much more. Is that the type of challenge you're talking about, or are there other challenges that you're seeing?
No, I think you've nailed it. I think that what there has been a lot of mainstreaming of sustainable investing. I think the phases we've gone through are, what on earth is sustainability? I think people have basically understood that,
Yeah,
to a certain degree. Now we're into the sort of how do you implement that? And then I think there's an increasing imperative beyond that, which is the sort of when dimension. So this idea in particular as it relates to climate of the time value of carbon. So we need to decarbonize, 50% of emissions by 2030, which is 8.5 years away. And the current way the capital markets are set up and businesses set up is a long way from actually being able to deliver that. So yes. I think the complexities now are more about, okay, so there's a sustainability imperative that is challenging traditional industries like the energy industry or the car industry, and they are reacting by delivering clean energy and electric mobility. But what does the imperative mean for asset managers? What does it mean for capital allocators? We also need to innovate our model so that we can generate not just great long-term financial returns, but we can also generate the necessary impact and get capital into the right parts of the economy to truly decarbonize it. And so there's this question, sorry if I may,
no, please.
Of about just the rigor of implementation of ESG. And so, there's lots of talk about, the greenwashing wave, which I think is alive and well right now, and that there's a lot of focus on making sure that there's rigor and integrity to a lot of the ESG claims that a lot of funds are making and a lot of companies are making. And this is becoming the law of the land. So the EU taxonomy is a very important initiative that will help define what is truly sustainable activity. The TCFD, the Task Force on Climate-Related Financial Disclosures, is a very important reporting framework that will be forcing people to be explicit about, in particular, their climate risk that they're running. And then you have the SEC here in the US that is putting together an enforcement task force to focus in on ESG claims being made by asset managers. That is really important because it will basically shake out greenwash, and it will force asset managers to really make sure that they are true to what they're saying in terms of ESG. Because I think the consumer of investment products is confused, and both institutional clients as well as retail clients, I think, are confused. And there's so many different shades of gray in the investment community, and everything needs to happen. Every asset class, every subsector, everything needs to integrate ESG. But there are different levels of ambition and rigor associated to different types of claims. And at the moment, it's a bit of a one size fits all. Everyone's an ESG fund or a sustainable fund, but the reality is much more complicated behind that. And so we feel that this notion of maybe we're going through peak greenwashing, if you like, and we're going to be coming out the other side where the focus is going to be on authentic impact.
Yeah, so I'm worried about that because I can see a universe where all these structures do come into play, and there is some sort of like enforcement around if you can really call yourself ESG, but then people still just do the bare minimum to be able to use the ESG in their marketing. So they don't say we're an ESG fund, but they do one ESG project and then put the word ESG somewhere on their website, so people at least feel better about themselves, when they give themselves a pass to invest. Yeah, are you worried about that too?
Yeah, definitely. I mean, I think but I think the problem with that is that we are heading to a 3 to 4 degrees C temperature rise world right now. And the likelihood of a disorderly transition to net zero is very, very high. And what does that mean? That means that the physical climate risk that is in the system today is getting more and more extreme. And related to that, the regulatory intervention risk is going up a lot. So the inevitable policy response around climate is a very real risk where the capital markets are generally undereducated and overexposed.
And what you mean is that somebody might like literally have a stranded asset. Like they might think that they've invested in this technology and they're going to receive revenue from it for the next 40 years to pay off their debt. But if they see some of those assets being shut down, not generating revenue anymore, they're going to be a little bit more wary about joining the next project where that might happen. And so there's going to be some self-modulation of their behavior, seeing that regulatory risk. Is that the type of thing you're referring to?
Yes, that, and I think that the regulator is going to play a lot more of a directive role in how capital is allocated and how quickly we need a transition to net zero.
Tell me more about that.
Well,
how are they going to get involved in how capital is allocated?
COVID's a very good dress rehearsal for climate.
Yeah, that's interesting. That is interesting.
The level of intervention from governments around COVID, look at what it's done.
Yeah.
The same is going to happen with climate.
Yeah, that is interesting.
It's going to happen with climate.
But that can be scary too, right? Because, if government does well, that's great. But if the wrong people in government, or if they're miseducated on what's true impact, like if they don't have you as the coach in their corner and they've got some other guy, what if the big hammer of government comes in with $3 trillion and knocks the wrong nail?
Yeah, again, I don't think we're the fountain of all truth on this at all. I think that
you're too humble. I'm trying to talk you up here because of all your accomplishments.
No, I just want to thank you. I appreciate that, but it's a team effort at Generation for What. But also, I think more importantly for governments, they should listen to scientists, and that's who they should listen to. So if you just take science-based policy and you look at what's happening in terms of greenhouse gas emissions, which are still going up. Despite all the great announcements and everything, and we're not in line for the Paris Agreement, even with all the most recent announcements, which are all fantastic and heading in the right direction, but they are insufficient. Yeah. And as a consequence, the realization that the market itself will just solve this, right? People are realizing that is a fallacy. Yeah. And that, I think what that does for investors is that increases the risk that we will be constrained in what we can do. Right. So if, for example, you are one of the more cynical funds that is using ESG as a pure marketing tool, your portfolio will end up being very overexposed in a bad way to a disorderly transition to net zero. Yeah. Because you wouldn't have genuinely de-risked your portfolio to be climate ready. You would just have used it for marketing. So all I'm trying to say is that what has really impressed me over the last 2 years in terms of how the COVID response globally has been is the power of government. I think people, and I agree with you, there needs to be sensible people who are science driven that are doing this. But the idea that maybe at some point we, the capital markets, will be asked to put impact alongside risk return optimization for genuine societal outcomes, I think is the next wave of where this is all going. And because of the severity of the climate crisis, because it is, we're not solving it. We're not solving it. And it won't happen through just faster incrementalism. So that is a huge investment risk.
And then I guess
opportunities, sorry, by the way, Brett, and opportunity, I must stress.
No, of course.
I think the capital markets are waking up to this. It is the entire capital stock of the world needs to turn over to become net zero aligned. That is an enormous investment opportunity, the biggest that we have ever seen in history, because of the size of the market today and the level of transformation that needs to happen, in particular in the physical infrastructure of the world. And that people are waking up to that. It's fantastic. I mean, if you look at the Net Zero Asset Managers Alliance that Generation was central in putting together, that now has something like $37 trillion behind it, with 80 asset managers covering 40% of assets in the world that are committing to net zero. That is amazing.
I know this is, I mean, listen, my former background is a technology entrepreneur, and I'm constantly, for the last 3 years that I've been doing this, I've been constantly going back to Silicon Valley and trying to convince investors that you guys are playing in a very, small place. If you're thinking about the next, little piece of enterprise software, and you think that's your big, win, like get into climate and energy. Like what, but I still haven't seen, I mean, now I'm starting to see a little bit more, but I'd like to see the venture capital community, which has so many like interesting like lessons from like scalability and the rise of technology. There's so many interesting lessons to be able to, and pattern matching to be able to apply to a totally different subset of companies. I think I see a little bit more of it happening now, but I've been trying to push them to say, no, like make this a core like pillar of your fund. It's going to be the biggest opportunity in the world. It is going to dwarf your software investments by far.
Yeah, and I think the VC community is making a comeback when it comes to climate, for sure. I think there's some really interesting funds out there that are doing amazing work. I think the highest profile is probably the Breakthrough Energy platform that Gates put together, which is a phenomenal group that is very focused on.
A phenomenal group, interesting mandate, but man, that is not a typical VC fund. That took Bill Gates kind of strong arming a few of his buddies to get them all in a room. That wasn't so typical.
Yeah, but I mean, look, what they're doing is truly material. They're managing a few billion now, I think, and whatever. So, but I would say as well, that the part of the problem here is back to incentives. So the mandate that venture capitalists are given today by their investors is to generate as much financial return as possible. And so as a consequence, they focus in on capital light software businesses. Yeah. Because that is the quote easiest way to make money, right? I'm just sort of generalizing, but you take my point, versus investing in a project in a difficult geography to decarbonize the steel industry.
Yeah,
I
know, but you said it yourself, because of the size of the opportunity. What is this? The second slide in every pitch deck, it's total addressable market. And if what we do is say, look at all the infrastructure that has to be overhauled in the next 30 years, if like we as a society are going to survive, which I'm placing a bet that we will, let's look at this total addressable market. And that's bigger than software.
Yes, but the return on investment, or the value that you can generate, the return on capital is a lot lower. So this is a problem. There are easier ways to make money just in a returns perspective. I agree with you in terms of the volume of capital, but the return on that capital is lower. And the point to make as well is, revenue growth is just one metric. You need for value creation, you need to focus on profitability and returns as well as just revenue growth. So just having a big market is the starting point, but it's not and so the other point I would make is, or what I'm trying to say is that the incentive scheme needs to be broadened. So broadened to include impact. So if the VCs had a mandate from their investors to generate great financial returns and generate enormous climate impact, then they would do other things. But their mandate at the moment is purely a risk return mandate. It's purely a risk return mandate. They are given targets around a financial outcome, not an impact outcome. So what we're saying at Generation is, listen, a natural next step beyond where we are in best practice of sustainable investing today is to explicitly include impact as a target and as an outcome. And sorry to interject,
no, please.
It particularly relates to the decarbonization challenge, where you can monitor the progress you're making relative to the 50% emissions reduction we need by 2030. And so you can count that a ton of CO2 is a unit of currency that is understood. And you can track it. Yes, it's art and science, but you can track it. And so I think VCs are waking up to that, and private equity is waking up to that, infrastructure funds are waking up to that thinking about, not just your financial target, but also what your proposition is on impact, climate impact in particular, is going to become something that people are going to be very interested in. And, the other thing you got to remember is that asset managers' clients are often pension funds.
I was literally just gonna bring that up. So I was gonna say, ask you, what is the actual targeted way that we get the LPs of any of these asset classes to tell the investors themselves that this is important? And so with pension funds, since they've got this long-term thinking kind of built into their business, are they the first ones that we go after, and we just go from board to board of the pension funds and say, you have to do this, like this is too important?
Yes, absolutely. I mean, I think the pension funds are absolutely critical, as are many other asset owners. Now, I recognize that organizations only move at a certain pace, but ultimately persuading the financial fiduciary community, the very large asset owners of the world, to allocate to climate transition assets very explicitly is what we all collectively have to do in the next 5 years. And we have to make that case collectively. And and so I think that many of these asset owners they're obviously extremely smart, and they are very good at thinking about systemic risk. And many of them are very, very concerned about climate and are making commitments themselves to being net zero, and are pushing this down to the asset managers that they work with. And so the question is, how serious can they be, and how quickly can they integrate climate across their entire portfolio? Not just a little 5% allocation in the corner, right? That's a starting point. But what about everything else you're invested in?
Yeah.
What about the entire infrastructure that you are invested in all of the assets that you own that are fundamentally underpinned by assumptions of business as usual? And business is not going to be as usual because of the disorderly transition that is coming on climate. And so I think there are many very sophisticated investors, very large investors, asset owners in the world who are thinking about this in a very, very serious way. And if you look at the Net Zero Asset Owners Alliance, so as distinct to the Asset Managers Alliance, that includes some of the smartest, biggest investors in the world who are committing to net zero. And I think the question now is, we're at a point of how do you do that, and when do you do that?
And you're talking about like the BlackRocks. Is that what you're talking about in terms of the new cohort that's of asset owners that's thinking about this seriously?
I would classify BlackRock as an asset manager,
okay,
rather than an asset owner. So they are, they're like us in the sense that we manage assets on behalf of asset owners like pension funds.
I see.
So, but BlackRock is certainly a leader, and Larry Fink has done amazing work along with his colleagues in terms of integrating sustainability into BlackRock's mandate. And they have other challenges than Generation has, because they manage a few $1 trillion or whatever the number is, and as a consequence, they have a lot of legacy assets in there. And so BlackRock's challenge is, how do we deal with all of that stuff, as well as dealing with the new innovation and the next level of thinking in terms of the exciting up and coming companies and projects. But the other point I want to make is, let's not forget that the transition to net zero requires many things to happen simultaneously in all parts of the world. And so this is not just a US North America decarbonize the grid story, right? Or get some electric vehicles on the road. I mean, stopping deforestation, right? Thinking about oceanic sequestration issues, and thinking about food and agriculture when the physical climate risks around food productivity and crop yields is a major threat, and we need a shift to regenerative agriculture everywhere as quickly as possible. And we're miles behind on that. And
so, are you more in the camp of like technology, like big technology breakthroughs are gonna enable this, or are you more in the camp of we just have to act appropriately, and just slight advances on the technologies that we have can do the trick? Like, regenerative agriculture is already a thing. Do you feel like if we just got everyone into regenerative agriculture, that would be fine? Or do you think that we need like real, like new regenerative tools, bioengineering, whatever it is, to get us to the level we really need to do to fix like the global climate issue?
Well, we need both. We need innovation and we need deployment. Both need to be accelerated and applied at scale. So I think what's very exciting about climate solutions investing generally is that there are plenty of ways to reduce emissions that are but they just need to be deployed. And so if you think about the retrofitting of old buildings, that is not a technical challenge, really. It's really an implementation challenge around the principal agent problem. And that is a business model challenge for deployment. It's not a technical challenge. Whereas there are some aspects where you do need technical breakthroughs. And so equally in the renewable energy space, wind and solar works perfectly well today and is economic in most parts of the world. And so that is a no-brainer economically. But what are the constraints to rolling that out? It's T&D infrastructure in difficult parts of the world. It's the lack of storage capability to deal with the intermittency. It's other things that need to happen beyond just pure tech breakthroughs in fundamental technologies. So we're saying you need both. You need to do all the innovation stuff. The challenge is the timeliness of decarbonization. We don't have time to wait for innovations that are going to be ready in 2050. Right? We have to deploy solutions right now to the biggest part of the 2050, 2040 net zero challenge is the next 8 or 9 years. We have to take, and if we don't reduce by 50, we will have no chance because the climate system will reach tipping points where human intervention will be impotent. That's why deployment becomes so important and not just innovation. And it is both. You need both.
I mean, the concern that you were expressing is the same thing that drove me into this space, but 8 or 9 years is not a lot of time with the types of things that you're talking about, like when you say collectively, we need to change people's minds to incorporate sustainability into every part of their, of their holdings and the assets that they own and manage. 8 or 9 years to get everyone on board with that just doesn't seem like a lot. So are you worried, optimistic? I mean, when I hear things like that, that makes me think more that we need some fundamental breakthroughs to come through, kick ass and help from a technology perspective, overcome some of the challenges that we have just from a deployment perspective. Right? For instance, with the building efficiency is yes, you could get everyone to upgrade all their buildings, but that's dealing with a lot of people and a lot of unique different infrastructure. But if we could produce clean energy 3 times cheaper, maybe you don't need that. Right. So what do you feel about that?
Yeah, look, fundamentally, we feel optimistic. I think it is fair to say we do feel we are reaching a tipping point this year in particular in policy, general culture, business, investing. So I think we overall feel optimistic. However, I take your point in terms of, 8, 9 years in terms of changing people's mindsets is going to be difficult. So this ties back to the point I was trying to make earlier, which is the likelihood of regulatory intervention is going up every day because people aren't waking up quickly enough.
Yeah, I see.
The governments will take responsibility. They'll start saying, okay, we're doing this. You don't understand it yet, but we're doing it because it affects all of us.
I see. Now I see what you're saying. What you're saying is the risk is actually tied to the urgency.
Absolutely.
Yeah.
100%. 100%. And that's why the market has been left to deal with climate for the last 10, 20 years, and it's got nowhere.
Yeah.
It's got nowhere. And so the regulator, i.e. the governments, are kind of saying, whoa, we got to protect our populations here.
Yeah.
We actually need to intervene. And this is a fundamental quality of life question that's going to destroy our economy if we don't do something with it. And we can't just leave it up to the generations and the BlackRocks and the TPGs of the world to deal with it. Because while we're all doing great work, it's not enough. Yeah. Because the system is still geared to maximizing financial returns. It's not geared to maximizing impact. And that's why you need a systemic change, which can only come through a very firm regulatory intervention. Now, we are off to a good start with the Biden administration. What he is doing and what he has done, and if he gets all these bills through, is an enormous step in the right direction, right? That what China is committing to is an enormous step in the right direction. And, what's going to happen in Glasgow at the COP later this year is going to hopefully be more momentum. So I think that is, I think people do feel we're getting to a tipping point. I think the challenge will be in the implementation. So we're very good at setting ambition, making announcements, setting targets that some people think are far too far out there that no one's really going to, think about. I mean, it's easy to put a 2050 target out, right? So I think people are increasingly focusing on what is your stepping stone to 2050? So where are you going to be in 2025? Where are you going to be in 2030? That's what I really want to know to be credible. If you're a business or an investor, or a country in terms of your journey to net zero. And so that is, I think that, the point I'm trying to make is that, unfortunately, Al Gore made a movie about this. It's an inconvenient truth, right? That climate is a very inconvenient thing, unfortunately. And the urgency question is very real. And, that's why I say COVID is a dress rehearsal for climate, because the governments wouldn't just leave the market to deal with COVID, right? They didn't. They intervened. They're going to do the same with climate.
Colin le Duc, as we wrap up here, final thought.
Basically, if anybody is listening and is invested in the market, please make sure your money is directed at climate solutions and sustainable investments. That's my final thought.
Colin le Duc, thank you so much for your time, sharing your insight and wisdom with us today.
Thanks a lot, Brett. Really appreciate it.
Our leadership in science and industry, our hopes for peace and security, our obligations to ourselves as well as others, all require us to make this effort, to solve these mysteries, to solve them for the good of all men and for the progress of all people.